Right, traders, welcome back to the channel. Here we have the NASDAQ or the NAS 100 chart in front of us. We're going to be going over a quick potential case study trade that you could have taken on this particular pair. So this is Wednesday, the 3rd of April, right? So where do we begin? We begin here with the Asian range as we do always. So a couple of pointers about the Asian range, quite specifically, is the fact that, if I make the text bigger, the Asian range itself builds liquidity, right? So this is what the dollar sign stands for. We have the Asian range over here that builds liquidity. So what's the purpose of the Asian range? Well, like I said, is to build liquidity, but we use it in the form of manipulation. And here's how we do so. So what we see is we see price creating the Asian low over here. So this here is the Asian low. And we see price head downwards, and we see price taking the Asian low to the right of your screen, right? So a couple of things to note from this is the fact that we've had equal lows that get produced in the London session, right? So when we have the market make equal lows in the form of just sell side liquidity, very simply sell side liquidity, when we have London producing liquidity like this, engineering liquidity like this, what does it represent? So we understand this is the NASDAQ, right? So we understand this is NAS 100, right? And the NAS 100 will primarily move in the New York session, as most people should know by now, right? NASDAQ will move in New York. But when we see London session volatility, what does that represent to us? Well, the London session aims to accumulate and manipulate. So we have the Asian session, which is the quietest session, the least amount of volume in this session, right? So the Asian session simply builds liquidity, right? But the London session also in the NASDAQ does the same thing as well as manipulating, so taking liquidity on either side of the market. This is something we're going to dissect now, right? The NASDAQ engineers equal lows that eventually get swept, right? We see the Judah swing or the low of the day in this region over here, right? So this here in yellow marks out that Judah swing. Judah swing, a million times I go through this. The Judah swing is the lowest point of the day. So this Judah swing here is the low of the day, LOTD, low of the day. And simply that represents a sweep of sell-side liquidity. But what else do we see? What else does the market actually engineer, right? What else does the market engineer? The market will sweep, in this case, either the Asian high, which we didn't quite get up to. So this is the Asian high in the London session, right? Prior to that, we see this as buy-side manipulation. What did it manipulate? There's two things price can manipulate. The first is, of course, this red line over here, which is the Asian high. The second thing price can manipulate is the New York midnight opening price. So this is the end of that Asian session. So this is here in this region over here. And that's exactly what we get. We get our buy-side manipulation over here. So this top yellow box here is what we call manipulation phase one. Right, so we call this manipulation phase one, or simply the London manipulation, right? London session manipulation, right? So you can call it whatever you want, but it's typically the manipulation phase one or the London manipulation. So from this, we need to understand that your Judah swing will occur near the price point or near the time zones of, 2:30 to 4:30, right? 2:30 to 4:30 UK time. Or if you're looking at it from Eastern Standard Time, it's going to be 9:30 to 11:30, right? Or 9:30 to 11 Eastern Standard Time, right? That's typically when you're going to get your main manipulation swing or the Judah swing, like we call, which is the manipulation of the market, right? So this here represents manipulation, right? So we've seen our two-phase manipulation model sweeping buy-side liquidity in the form of the opening session, the opening day price, right? The 0000 Eastern Standard Time, the New York Midnight Standard Time. And we see the London session have a main purpose of also continuing on that accumulation, but also here in yellow. So this here is the manipulation of the London session, right? This here entices early buyers into the market, right? This is the market telling buyers, right? Those uninformed, impatient buyers who simply don't know what they're doing. This entices early buyers, right? This entices early buyers. So what you want to be is you don't want to be them, right? Don't be this. Don't be this at all. Don't want this, don't be this, right? So now you understand from a timing perspective, what we're looking for is we're looking for a displacement or a market shift in this region, right? So if we zoom out to the charts, right, it's very obvious to see where that market shift was, right? We see the market shift over here, right? So we're looking for price to do this. We're looking for price to go down, 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 and then break the high, right? So we see this market shift just over here like this, right? There's one down here. So this is the sort of minor shift, if you like, but we have our major shift, which gives extra confirmation to look for buys just over here, right? So this is our boss, right? It can be down here if you're more aggressive, but conservative traders just up here, break of structure. So now what you want to understand is you want to understand the premium and discount arrays. So we have a fair value gap just over here in this region, right? So this fair value gap that I've marked out in blue is where we want to be looking to enter off, right? But is this fair value gap correctly priced? So we need to understand three things, right? We need to understand we've had a structural break of structure, we've had an inefficiency in price or a fair value gap, right? This is our fair value gap. A very quick and extremely important thing to understand is that it's a time-based fair value gap, right? So we're not trading in the London session, right? We're not going to be trading the Nasdaq during the London session. That would be a stupid thing to do because we need to understand the volume, the true volume that we need to be taking advantage of is from 9:30 to 11:30 Eastern Standard Time or 2:30 to 4:30 UK time or wherever you are around the world. Please calibrate that to those two times, right? It's very important to catch the true fair value gap, which represents the true volatility in the market, right? So now that we have a time-based fair value gap, the last thing we need to do to validate our order block is the fact that we need to use premium and discount arrays. And what do I mean by that, right? We use the Fibonacci tool. We project it from the swing low up to the swing high, just like this. So we have a swing low and we have a swing high. So now it's very simple what you have to do. You have to key off a fair value gap where price enters the discount. And so how do you do that? So we have a fair value gap over here. That 50% level marks out where we need to be selling below. So from here, your job is to key off a fair value gap. A safe place to keep your stop into price will be anywhere sort of around this region over here, so just below the Judas swing. And where do you want to target, right? Where's the safest place to target? Well, we had that sell-off over here, so it's important not to be too greedy and hold your trades. But we have the previous day high from before, right? So if we zoom into price again over here, this here is your previous day high, right? So this high over here was the high from the day before, so PDH, right? PDH, previous day high. And your job now is simply to target that previous day high, giving you a 1 to 2 hour trade, right? So an excellent trade that you could have taken simply understanding what an order block is, but more so keying your fair value gaps as a function of time.